Thanks everyone for joining today. My name is Bruno from Spainguru.es. This is the free Spanish taxes overview webinar. And let's start. A little bit about Spainguru. So what is the objective of Spainguru? Facilitating the relocation process for English-speaking foreigners to Spain since 2014. So 11 years in the industry. As you can see there, we have excellent reviews. And my name is Bruno Bianchi, and I run Spainguru.es. If you go to Spainguru.es, you will find a lot of information, a big blog with a lot of blog posts, more than 1,600 blog posts. And you will also find recommended partners. Most of the partners, I would say 9 out of 10, I've been recommending them for several years, and I only got good feedback from them. So you're in good hands if you decide to go with any of them. You will find immigration experts, tax advisors, very important, in my opinion, that you engage with a tax advisor before even taking the decision to come to Spain, so you know what's going to happen once you are here. Visa compliant health insurances, potentially you will need those unless you are UK retirees. Medical certificates, sworn translations, apostille services, and peripheral services like opening bank accounts or opening WISE accounts or currency converters or money transfer services, all those property rentals, even if before you arrive to Spain, mortgages, in case you are thinking about buying a property in Spain and you want a mortgage, all those and much more than 100 services, all personally vetted by me, you will find on Spainguru.es, apart from many free resources. We're going to talk about those now. Every week, I send a weekly newsletter every Monday at 10:15 Central European Time with the top 10 discussions from all the Spainguru's Facebook groups, and also investigation blog posts and the most watched video of the week. So you get everything compressed there every Monday for you in your inbox, absolutely free, and you can opt out anytime. YouTube channel, more than 800 videos. Blog, as I said, more than 1,600 articles, and the Facebook groups with an aggregated members amount of 140,000 people joining these groups. The top groups: Spanish immigration, no lucrative visa, digital nomad visa, dedicated groups, and more. So all that is Spainguru. A disclaimer for this webinar: this presentation is for general information purposes only and does not constitute legal, financial, or tax advice. Consult a qualified tax advisor. I'm not one, okay? Or legal professional for personalized guidance. You can find recommended tax advisors on Spainguru.es. Spainguru is not responsible for any errors or outcomes from using this information, okay? Having said that, the objectives of this webinar is, first of all, is to gain an overview of the Spanish taxes and understand the key tax categories in Spain, learn the basic principles of taxation in Spain, prepare for an informed conversation with a tax advisor. So you're not going there absolutely blank with no information. So you have a more sophisticated, more effective conversation with a tax professional, and being able to ask more precise questions to this professional so that everything actually, matches, and all the information matches to your specific situation before moving to Spain. Clarify the role of the professional tax advice, and understand that this webinar is general information and it will not replace a personalized tax advice. This is important. And recognize how individual circumstances can significantly impact tax liabilities, okay? And 4, and last, identify key considerations for expats. Learn about potential tax implications for US and UK nationals, mostly, okay? But 99% of the information shared here applies for any other nationality, non-EU nationality. Of course, when there is a double taxation agreement, that Spain has many taxation agreements with many different countries, be aware of compliance requirements and deadlines to avoid potential penalties. Of course, you need to be compliant with taxes when you move to Spain. Now, let's start with the first and most important concept: Spanish tax residency. How do you establish tax residency in Spain? The most important condition is when you spend more than 183 days in the country within a calendar year, and every day counts. It is about physical presence in Spain. It doesn't matter the status, okay? If you arrive after July 2nd with 182 days left in the year, you will not become tax resident that calendar year, okay? But if you happen to have been 10 days earlier that same year as a tourist, those days count. So it doesn't matter your immigration status. What is important is the physical presence in Spain, and it's not specified a minimum amount of hours. The first second you set foot in Spain, that day counts for tax residency. So that's very important. Then there are other conditions, like having the main economic or business activity in Spain, or interests in Spain. For example, having your wife and children or your spouse or your husband in Spain, even if you spend less than that period of time during the calendar year, or if your main source of income comes from Spain. Okay, so that's the second condition: main economic or business activity based in Spain. So as we said, if you arrive after July 2nd and you haven't been earlier in the year in Spain, then you will avoid making yourself a tax resident during that calendar year from January 1st, okay? But if you make yourself a tax resident, if you arrive on July 1st, for example, and you stay until the end of the year, you will be a tax resident from January 1st. So retroactively, yes, before you arrived. So any tax event that happens during the calendar year will be taxable by the Spanish authorities. So verify your travel records, count prior days spent in Spain, refer to double taxation treaties for guidance on tiebreaker rules in case of conflicts. Sometimes there are conflicts. If you spent decent amount of time in a country and then you move to Spain, sometimes there is it is not clear where you are tax resident, okay, depending on the rules for tax residents in those two countries. So if there is a double taxation agreement, there are tiebreaker rules that will tell exactly if you became a tax resident in this country or the other. Now, consequences of being a tax resident in Spain. Tax resident in Spain is subject to taxation on worldwide income and assets also, okay? We're going to talk about that. And non-tax residents, only income and assets sourced from or located in Spain are taxable. Okay, we're going to also talk about that, especially for digital nomads who move at the end of the year and work from Spain. These are non-resident taxpayers in Spain for that part of the year. All right, we're going to talk about that. Now, let's talk about non-residents, as we said. Yes, you spend less than 183 days in Spain, but for example, you have a property in Spain that you rent out, okay? Now, there's two categories: European Union passport holders or associate countries, and non-European Union, okay? There are different tax rates. So for non-European Union, the general tax rate for non-residents is 24%, or if you have a rental property here, for example, right? So there you have the data. Now, tax systems and obligations in Spain. Tax systems, also called tax regimes. The general tax regime and the special tax regime. The general tax regime, the first one, the most important, it includes personal income tax, called in Spanish IRPF, impuesto tax sobre la renta de las personas físicas. So this is the personal income tax, the most important one probably. Then there is the wealth tax, impuesto sobre el patrimonio, okay, that taxes assets value. And the solidarity tax, which is like a wealth tax, but on a national, it reaches every single region in Spain. Okay, it's a national tax. And then there is the 720 informative form. It is not a tax, but you need to inform the tax authorities about your overseas assets. You need to tell them what you got outside of Spain. Okay, every year, or at least the first year that you are in Spain, you need to do it and then communicate variations. Now, there is a special tax regime, also called the Beckham Law, that has specific eligibility, okay, situations. So for specific situations, for example, relocation to Spain for work purposes, okay? This is very important because a lot of people move to Spain as a self-employed, but really it is very, very, very hard to be eligible for this special tax regime as a self-employed. This is a tax regime that is mostly thought or intended for workers who move to Spain, okay? What are the advantages, going more in depth about this special tax regime? There are advantages, but there are also cons. Now, the most important one, there is a flat 24% tax rate applicable to employment income worldwide. Non-Spanish income is exempt from taxation, okay? And no requirement to submit the 720 informative form for declaration of overseas assets, or you don't have to pay wealth tax. So those are the main advantages of the Beckham Law. The cons, the tax savings for earnings lower than 55,000 euros are minimal, okay? So it is not really recommended. It's only recommended if you're making more than 60K, usually, for different reasons. There is additional administrative burden that may outweigh the benefits. No family deductions or allowances, for example, okay? You don't get those, right? And it's being reported by different members. And also, recently, a member published a one-page publicity in the Wall Street Journal about lawyers that were stating that people, under the Beckham Law in Spain, there was some persecution, or tax authorities are really targeting those and making a lot of questions all the time, etc. I don't even know if it's really true that they are facing extra scrutiny or not, but it has been appearing lately in the different Facebook groups that Spainguru administers. And it's something maybe interesting to mention if you plan to go on the special tax regime. Now, let's go with the tax obligations that you have when you move to Spain. The first tax obligation, declaring overseas assets. As we said, it's an informative form called 720. Not only assets, but also rights held abroad, okay? Now, there are different categories, for example, bank accounts, investments, real estate, cryptocurrencies. Cryptocurrencies actually is the 721 form. It's a new form, okay? And you need to declare, starting the threshold, 50,000 euros per category. So the category, for example, bank accounts. If you have two bank accounts of 25,000 euros, the total is 50,000 euros between those two bank accounts. So already you need to declare those two bank accounts. Okay. Now, the first year requirement, full disclosure of overseas assets, and this is especially meant for the calculation of wealth tax. The Spanish tax authorities want to know the assets that you have in Spain, but also abroad, because the wealth tax covers the value of all the assets everywhere in the world. Okay, and this is called the Impuesto del Patrimonio, wealth tax. And there is also a solidarity tax, okay, because some regions, they have 100% rebate or no wealth tax. So for those regions, there is the solidarity tax, which is a quite new sort of wealth tax, but on a national level, as we said. And then there is the personal income tax. Even if you disclose your assets, for example, if you disclose properties abroad, maybe the tax authorities in Spain, they infer or they think that you are obtaining income from those type of assets. Okay, so this is why you present that 720. Subsequent years, you report changes over 20,000 euros or asset closures, right? What is the deadline to submit this informative form? March 31st, following the first year of tax residency, okay? And the preparation begins on January 1st. So you normally will have 3 months to prepare this. What require documents? Bank statements, details of overseas assets. Okay, if you have properties, for example, you have to show documentation that you have those properties, etc., in order to establish a certain value for those properties. Now, the second tax obligation is the income tax filing, or also personal income tax, IRPF in Spanish. Taxable income. There is ordinary income subject to a progressive tax rate that ranges from 19% to start up to 47%. This includes as ordinary income, salaries, rental income, and business earnings. Now, investment income has a lower rates that goes from 19% to 30%, okay? And these are dividends, interest, capital gains tax, right? The deadline to file this tax is June 30th. So, for example, if you become tax resident in 2025, the deadline to declare the income tax for 2025 will be June 30th, 2026, okay? And you normally begin to prepare it with your gestor or tax advisor on April 1st, following year. U.S. citizens. This is a big question. U.S. citizens need to file taxes in April, normally. How do they do? So, according to the double taxation agreement between the USA and Spain, you need to file taxes first where you're a tax resident. So if you become tax resident in Spain, you have to file taxes first in Spain. But that happens in June. That's after April. So what you normally do in order to file taxes is that you request a US filing extension in April, and then you submit your Spanish taxes in May or June, and then you complete the US filing 1040, deducting the taxes paid in Spain under the tax treaty in order to avoid double taxation. So you will not pay taxes, you will not pay twice the same tax, but potentially you will pay higher tax because you will be paying the tax rates in Spain, okay? But you will not pay tax twice because of the same thing. Now, this is an example on how the brackets for the income tax work. A lot of people say, I'm making, I don't know, I'm making 80,000 euros, and the tax bracket for 80,000 euros is 45%, right? So, whoa, I'm going to pay 45% for 80,000 euros income. I'm not talking about allowances or any deductions or anything. This is just for you to understand how the tax brackets calculation works. So, the thing is, you're not going to pay, and let's take a round number, 100,000 euros. Yes, as you can see, the bracket that goes from 60,000 to 300,000 euros pays 45%, right? So imagine you are making 100K a year. Will you pay 45%? No, really, you will pay an effective tax rate closer to 36%. because really the way that you calculate those tax brackets is that the first bracket that goes from €0 of income to 12,450 pays 19%. The next bracket pays 24%, the following 30, following 37. And the last part, all the income from 60,000 to 100,000, which is 40,000, will pay only that 40,000 euros will pay 45%. Okay, so if you do the calculation, if you do the maths, the effective tax rate for 100K income, roughly ballpark figure, will be 36,000 euros. And I did here a small calculation so you understand why we say they are progressive. Okay, the taxes. Imagine the effective tax rates from 30,000 euros of income. You can see there 40,000 euros of income, 50,000 euros of income. So 100K, as we say, 36%, and 30K will be around 24%. Right? And of course, as I said, and this is also act as a disclaimer, there are big regional variations. It depends where you live. There is a part of the income tax that is state tax, and there is a part that is a regional tax. So there are variations. And of course, depending on the type of income that you have, you may have allowances. Depending what your age is, okay, you may have allowances. Depending on the double taxation agreement, maybe the type of income that you have, for example, public pensions from the US don't pay taxes in Spain. They pay taxes in the US. So these kind of things I'm not taking into account here. This is just for illustrative purposes only, so that you understand how the tax brackets work. Now, let's talk about the third tax obligation, wealth and solidarity taxes. The first one, wealth tax, impuesto sobre el patrimonio. It is based on net wealth as of December 31st. So you need to calculate the value of your assets by December 31st. There are regional thresholds in order to start paying these taxes. Okay, so before these thresholds, you are exempt to pay wealth tax. For example, in Catalonia and Valencia, the thresholds start at 500,000 euros, and in most of other regions start at 700,000 euros. Okay, so if you're going to live in Catalonia, that this tax will be triggered earlier. Okay, there is also an exemption for if you have a home in Spain and you own it. You can also add to this threshold 300,000 euros. Okay, so for example, if you have a home, I don't know, in somewhere where in Catalonia for 300,000 euros, the threshold now will go from 500,000 to 800,000 euros. So if you have assets over 800,000 euros, then you will start paying taxes for everything that is above that threshold. Some regions, very important, like Madrid and Andalusia, have higher exemptions due to the solidarity tax. Okay, and also very important, in Madrid and Andalusia, there is a 100% rebate. What does this mean? That you need to file the tax, okay, but you will get 100% bonus on that tax. You will not pay anything, okay, but the authorities will still have your filing, right? There is also something called the 60% rule, which is quite complex, but basically it limits the tax liability to 60% of the taxable income, making it possible to reduce the wealth tax to up to 80%. This is especially applicable for people who have a lot of assets value, but smaller income. Okay, so if you have a lot of assets and very small income, there is also a cap or a limit to the wealth tax that cannot go over a certain threshold. Now, the deadlines to file the wealth tax is June 30th, okay, and the preparation starts on April 1st. Now let's talk about the solidarity tax. This was a reaction from the central government accusing certain regions to do tax war. Okay, so basically Madrid and Andalusia, who are governed by PP, and the socialist government, that is a national government, they decided to include a national wealth tax that triggers when the region has a bonification or a bonus or a rebate over the wealth tax. The good news is that this tax starts much higher threshold, 3 million with the 3 million assets value, and you should also add the 700,000 euros allowance, so 3.7 million euros of assets. Okay, and as I said, if you have a property, etc., maybe that can add up to 2, but then it works more or less the same way as the wealth tax, but basically you can't escape it if you move to Spain, even if you're in Madrid and Andalusia. And the deadline is 1 month after the wealth tax, July 31st. Now, this is a wealth tax calculation, example calculation, for someone who is living in Catalonia. As we said, in Catalonia, the threshold is lower, it's 500,000 euros, okay, to trigger this tax, okay? So As we said, this is a yearly tax on the net value of an individual's assets as of December 31st. And non-residents are taxed only on Spanish assets. Okay, so here, for example, imagine that you have 1 million euros in total assets. Okay, and you are in Catalonia. You have a home exemption of 300,000, 500,000 euros general exemption, total 800,000 exemption. So your taxable wealth for a million valued assets would be 200,000 euros. Now, there is also brackets. It is a progressive tax as well. You will pay less than 500 euros for the whole year if you have a million euros in total asset value if you live in Catalonia, right? And there you can see the table. For 1.5 million, you pay little over 3,000 euros. For 2 million, 8,000 euros, etc., etc. Okay, and these, of course, are general calculations. Now, remember that at the end, for people that were joining, we're going to have a Q&A session at the end. Make sure to add a question mark to your questions so that then it is very easy for me to recognize those questions and go through them one by one. And of course, if you're happy with this, you can always leave me a review on Trustpilot. There's the button on the top, on the green bar, there's a red button. And that's the only thing that I ask in exchange for this free webinar about taxes. Now, let's continue. Tax considerations for digital nomads. We're going to have 3 slides about digital nomads as well. The first one is about employees. The next one will be about self-employed. Now, if you come as a digital nomad, as an employee to Spain, it's important to have certain considerations. Employment relationships require an employer-employee contract. This is the equivalent of W-2 in the United States. Now, you need to contribute to Social Security or Seguridad Social. Now, the payments are made in Spain unless the employer lacks a local presence, okay? In which case, the employer must register for Spanish Social Security or provide a certificate of coverage, also called A1. At the moment, this is the thing, only UK, the United Kingdom A1 is accepted and lasts only 2 years without further renewals. So this is important. Like in the past, let's say it's only less than 2 years that this visa exists, the digital nomad visa. A lot of W-2 employees came to Spain, but now only the UK is allowing to come under the digital nomad visa as an employee and not as a self-employed. Okay, because of the Social Security certificate. Now, the Beckham Law benefits are available only to employees. This is also something to consider. A lot of people said, oh, I can come as a digital nomad to Spain and I will benefit with the 24% tax rate on income because there's the Beckham Law. Okay, be careful. If you come as a self-employed, it is very, very rare that you will be eligible for this special tax regime. Now, the deadlines for filing, as we said, for the general tax regimes for this situation, coming as an employee under the digital nomad visa is June 30th for the general tax regime, as we said, okay, or IRPF or income tax, or if you come with Beckham Law, is Form 151. And as we said, the preparation starts on April 1st. Now, tax consideration for digital nomads for contractors or self-employed. Digital nomads working under commercial agreements in Spain are considered self-employed, called autónomos, and are required to contribute to Spain's social security system, which provide access to healthcare and pension benefits. Okay, so as you know, contractors are not considered employees, meaning that they are responsible for managing their own tax filings and social security payments. Okay, so if you come here, the normal figure that you will be under autónomo or self-employed, unless you are a British national or let's say not British national, but someone who is applying for the digital nomad visa from the UK. Doesn't matter your nationality, in fact. Now, the Beckham Law will not apply for contractors, as we said, except very rare cases. And the deadlines, and as I said a little bit at the beginning, maybe sometimes you arrive in the second half of the year, so you will have to pay tax on your income if you're working physically from Spain, if you're working remotely for a company outside of Spain as a non-resident for those months. Okay, now we're going to see a little timeline about it. And for that, you will have to pay quarterly payments due July 15th of the following year, and the preparation begins on July 1st. And then the following year, normally, because of staying in Spain, you will become a resident in Spain, and then you will have to pay on a quarterly basis, okay, around 20% of your net income, okay, that then at the very end, after the end of the year, they will do a difference, and you will pay for the full year for the difference, okay, and a final tax return, as we said, for June 30th. And as we said, preparation begins on April 1st. You will also have to declare VAT that you charge to customers. But normally, if you work with Spanish companies, with companies that are not from Spain, you will normally not charge VAT. So those declarations will be a little bit of a formality, but you have to do them every quarter. Now, this is a case study for a digital nomad that arrives in September 2024, so after July 2nd. They can apply from Spain. This is the best way to apply for the digital nomad visa, in fact, in October 24, in this case. November 2024, approved for the digital nomad visa, and in December 2024, registered as autónomo. But they spent less than 183 days. Now, very important tax advisor answered this as a comment. For tax questions, if you ask 10 different people, you'll get 10 answers. This is a particularly gray area, as you weren't resident until you got the TIE card, so you weren't even officially allowed to work. You're supposed to pay tax in the country where you are physically working, which is maybe what you mean by address. So strictly speaking, any work performed since September, as long as you are physically in Spain, you will have to pay as a non-resident in this case. Now, let's get out from Spanish digital nomad visa. Let's talk about additional taxes in Spain that apply to anyone under any immigration status. First one to have into account is inheritance and gift tax, impuestos sobre sucesiones y donaciones. This is paid by the heir or recipient. And of course, there's a lot of rules about tax reductions depending on how far away you are from as a heir from the person who is giving you the money or receiving the money in inheritance, and exemptions. And there's a lot of regional variation. So this is very important to consult with someone expert into inheritances. And of course, you can find that person on Spainguru.es if you need. There's also sometimes people don't want to receive inheritance in Spain because they have so much tax to pay that they need the cash, but the type of inheritance that they are receiving is not liquid enough for them to pay the cash, and they don't have the cash to pay the tax. So we are in these bad situations, okay? So yes, it's something that you need to plan before doing any movement. Now, there's also transfer tax, Impuesto de Transmisiones Patrimoniales, or ITP, which applies to property purchases, okay? This is second-hand properties, because when you buy a new built property, you will pay VAT, which is general at 10%, not the general rate of 21% for most of the goods, but new properties are 10%, new build properties. But if you buy a second-hand property from another owner, it will depend on the region where you're buying the property. For example, Madrid is 6%. I think Valencia is 10%. Here in Andalusia, where I live, is 7%. Okay, and you have to pay that at the beginning when you buy the property. This is also something different from the United States, that you pay this, let's say, the same type of tax, let's say, but you pay when you sell your property. So in Spain, they want the money quickly. Okay, so you buy 100,000 euros property, you will have 2 months from the moment you sign in the notary to pay that 7% tax, so 7,000 euros right away. Okay, so different from the USA. And I add here 100% for non-residents. Well, you probably are aware of the announcement that Mr. Pedro Sánchez, the first minister of Spain, said in a 3.5-hour speech. He talked about a minute about this only and never talked again about it. So we don't have any further explanation. But he announced that the non-resident, non-EU, so non-resident, non-EU, okay, not only non-EU nationals, also non-resident, non-EU nationals, would have to pay 100% tax on their property purchases. And he said textually, 100% of the value of the property, not that the tax will double, okay? Not that 7% or 10% would become 14 or 20%. No, he said 100% of the value of the property. So if you're buying a property of 300,000, he meant 300,000 euros of tax. So this is what he said. He dropped the bomb there and never talked about it again. But what's important to understand is that this is not a law. This is not a rule. This is just a proposal that he did in a political meeting, okay? So this is the status right now. And I have videos on Spainguru's YouTube channel about it if you want to know more. Now, property tax, impuestos sobre bienes inmuebles, or IBI. Annual tax based on the cadastral value of the property. Every year you will pay according to your property. This is a quite cheap tax compared to the house tax or property tax that you have in the US, as far as I know. For example, here you have a 100 square meter apartment and maybe you pay 300 euros tax for the whole year, which seems peanuts, I think, compared to property taxes in the States. Now, municipal capital gains tax, impuesto sobre el incremento del valor de los terrenos naturaleza urbana, o plusvalía municipal. It's like a tongue twister, isn't it? This is the capital gains tax. Basically, you pay taxes over the difference that you made. For example, if you bought for 100K and you sell for 150K, you will pay a certain amount of tax for that 50K difference. Okay, so tax on the increase in property value upon sale. calculation methods depend on the municipality, and it is not exactly what you sign in the notary as the price or the declared price, but it is based on certain calculations depending on where this is happening in Spain. And as I said, this is the video I was talking 100% ITP or Impuesto de Transmisiones Patrimoniales for non-residents. This is a proposal, and you can watch the video on YouTube. And of course, I made the thumbnail with Pedro Sanchez looking like the devil, because, of course, I don't think it is very fair or good for the Spanish economy to tax 100% of the value of the property to anyone. But as we said, this is not a law or anything that's going to happen anytime soon, or if anything is going to happen at all in general. Now, about timing strategies to avoid the capital gains tax. Many of you plan to sell your property in your country of origin before coming to Spain, maybe to get funds for the non-lucrative visa, maybe because you don't need that property, and maybe because it's also the last opportunity to not be liable of capital gains tax. Because if you move to Spain and you maintain your property in USA, for example, or UK, and then after you become a tax resident in Spain, and you want to sell your property, you will have to pay capital gains tax in Spain. Of course, you will credit what you paid as capital gains tax using the double taxation agreement. So you will not pay taxes in the US for that. But of course, the capital gains tax may be much higher in Spain than what you have paid in your origin country. Now, there's two ways to do it to avoid capital gains tax, looking at the timing of when you do it. As we said, the Spanish tax year starts on January 1st and goes to December 31st. So if you sell, for example, your house in 2023 and you move to Spain in 2024, you avoid capital gains tax in Spain. Now, if you plan to do everything during the same year, you have to be careful not to have spent 183 days in Spain. Therefore, you need to sell your property. You need to move to Spain after July 2nd and spend less than 183 days. Because if you moved, for example, if you sold your property in February, okay, and you move on July 1st and you stay in Spain until December 31st, you would be liable for capital gains tax in Spain because it is retroactive to that same year. I hope that makes sense. Now, we're talking about the capital gains tax. Here you can see the tax rates. You know how we calculate the brackets. The calculation of brackets is the same for any progressive tax in Spain. And you can see there the different tax rates for the let's say the profit that you made, how much you would be paying. So you can make an idea on how much you would be paying and how much you could offset in your origin countries. But for example, I was talking to someone who was from Tennessee, I believe, and he told me that in his state, there is no capital gains tax. Don't quote me on this, but this is what he told me. I'm not sure. I shouldn't really check it for the next webinar. But yeah, imagine that you had to pay this tax, and then in your origin state, you didn't have to. So you should definitely have to avoid this. Now, another frequently asked question: if you retire in Spain, is your pension taxable? Now, it is taxed if you're a Spanish tax resident, your pension, generally, if you spend, of course, over 183 days in Spain per year. The threshold for declaring pensions: if you have a single income source, the threshold to declare them is 22,000 euros per year, but that doesn't matter too much because if you have multiple income sources, the threshold goes down to 12,000 euros aggregate income. And if the second source or secondary source, the higher one after the main one, is more than 1,500 euros. So, for example, you have pension and income, rental income, for example. And also, if pensions from abroad appear as a second payer, so if they are greater than 1,500 euros, you always have to declare them. Okay, so this is how it works. Now, as we said, the progressive tax rates range, as we saw for income tax, from 19% to 47%. We're not looking at allowances. We're going to talk about that later on. Now, there are specific rules for US and UK nationals. In the US, Social Security and private pensions are taxable, but government pensions are exempt unless you potentially this is not very clear, unless you're a dual citizen holding Spanish citizenship. So this is also a question that people ask. If I become a Spanish citizen and I'm not paying taxes on my government pension as an American in Spain, if I become a Spanish citizen, will I have to start paying? Because disclosing that I am American would be saying that I didn't renounce to my American citizenship. So I asked this to a lawyer, and the lawyer said, no, you will. Don't worry, you will not have to pay taxes on your a government pension, but it is a gray area right there. UK, state and private pensions are taxable and public sector pensions may be exempt. All this because of the double taxation agreements. And as we said, there are allowances for pensioners ages 65 to 74. There is a 6,700 euros annual allowance, so you don't pay tax on that. And over 75 is 8,100 euros annual allowance. Now, taxation of American 401ks and Roth IRAs in Spain. 401ks in Spain, taxation. Distributions are taxed as general income at progressive rates, as we said, up to 47%. Traditionally exempt from Modelo 720, the Overseas Assets Declaration, and wealth tax, but caution is advised due to evolving interpretations, okay? And we're going to talk about that. Roth IRA taxation, investment gains taxed as income at progressive rates, up to 26%, this is investment, must be reported on Modelo 720, okay, annually, based on the account surrender value as of December 31st, subject to wealth tax, with rates varying by region, as we said. Key considerations, coming back. Recent rulings, this was a consulta vinculante. This is when the law is not clear, a private person, an individual, asks the authority, okay, to give a statement on how to consider the rule, and this statement is applicable. This statement is the rule or the law, okay? So this means vinculante, right? This last consulta vinculante in 2022 suggests that IRAs and possibly 401ks require reporting in Form 720. Especially I'm talking about 401ks. You should seek professional advice to ensure compliance and avoid penalties, okay? And if you want to know more about taxation of American 401ks and Roth IRAs in Spain, I have quite a lot of content about this. There you have the QR codes for the different blog posts. And more generally, if you want to know more than this webinar about taxes in Spain as a UK national, as an US national, there's also articles there that are actually on Spainguru's homepage. If you go to Spainguru.es, you will find the links to those two articles, because those are very, very well-read articles on Spainguru. Now, this is a cheat sheet. I wanted to summarize everything so that you could take a screenshot, or when you receive the recording, you have everything in one page, which is quite hard because, as you can see, it's quite complex. But basically, these are the Spanish taxes overview, or at a glance, in 2025. Number one, tax residency in Spain, the definition, etc. 2, key tax obligations, Modelo 720, personal income tax, wealth and solidarity taxes. 3, special tax regimes like the Beckham Law. 4, taxation of pensions for US and UK nationals, focus on that, okay? Taxation of US investment accounts, okay, for 401ks, Roth IRAs. 6, taxes for digital nomads, and additional taxes, as we said, if you plan to buy property or inherit in Spain or receive a gift, or capital gains tax, etc. And the deadlines. To remember, we're going to have also here a calendar of deadlines in the next slide. And first, how can Spainguru help? You can go on Spainguru.es and you can find recommended tax advisors that know about UK, US filings as well. So they are very, very much focused and accustomed to deal with US and UK customers. And this is a calendar, the calendar for the Spanish tax in 2025, summarized as well. And you can see there in bold letters the personal income tax, wealth tax, solidarity tax, and Form 720. Okay, and you can see there the deadlines to apply. As I said before, on Spainguru you can find a lot of content, a lot of free resources. But if you also need professional advice and professional or vetted partners, you can find them also on Spainguru.es as well. Just go to the top menu and you will find everything there. And not only that, not only professional help, but also a lot of extra services that I'm sure you will need or consider that you will need when you move to Spain, or if you are already living in Spain. Now, let's stay in touch. You can send me an email anytime about anything to hello@spainguru.es. Nothing makes me happier than receiving an email from you. So please do it. If you have a question that I didn't address, or I didn't know the answer, or you think I should add to this webinar, just feel free to write it and I will do my best to answer you. Join, please, Facebook groups, okay? I have dedicated groups for Spanish non-lucrative visa. This is an example, Spanish NLV. I also have digital nomad visa, general immigration groups, etc. So it is very important, in my opinion, to stay in touch with the community for people who are applying for different visas, people who are planning to move to Spain with more general questions, people who know or are in the same situation as you, because the rules are changing all the time. So it's great to be in the loop. And of course, all the information in social media, you need to take it with a grain of salt, but it is interesting also to have that perspective. And also, if you can, watch YouTube, more than 800 videos, a lot of them about taxes, and join the newsletter. All this is free, absolutely free, and you can opt out anytime. You can anytime opt out of the newsletter, or stop watching videos on YouTube, or participating from the Facebook group. So absolutely, you gain everything and you don't lose anything. Now, the content of this webinar is for information purposes only and is not tax or legal advice. Please consult with experienced tax advisor. Now, let's go to the Q&A session. And let's get ready for the questions. And the first two questions about switch browsers. Peter, that couldn't really hear anything. I'm sorry for you, but hopefully you will hear the recording I will send. Now, it says ordinary income includes withdrawals from savings and investment accounts. You really, like, this is a question for a tax advisor, unfortunately, because it needs to understand how you're doing, so what kind of withdrawals you are doing. Okay, withdrawing from savings. If interest, for example, interest is taxable. If we go here, personal income, puesto de la renta, overseas assets, here. So interest is investment income, right? So depending how much you're making on interest, you will calculate the different threshold, or the different brackets, okay? So this is the case about interest from savings, okay, or investment accounts. This is also would be from investment, from the second part, okay, for lower tax rates than general or ordinary income, I believe. Okay, I'm not a tax advisor, as I said. Now, pensions, including U.S. Social Security, are ordinary income. Yes, as we said, unless it is a public or government pension, okay, in the U.S., these are considered ordinary income, as far as I understand. For married couple, is the wealth tax per person or combined? So this is also a frequently asked question. It depends, because you have different regimes on how you marry, let's say, and how you consider your assets. All right. So it will depend if your assets are joint assets or if you have separation of those assets. Here in Spanish, we call it separación de bienes or gananciales. Separación de bienes is like each individual have its own assets. Okay. So it depends how you count those assets, if they are 100% for one of the persons in the couple, or if it only counts as 50% because it is a joint asset. So it will really depend how you count those assets toward the wealth tax, depending on the regime in which you are marrying. I hope that makes sense. My wife is a Spanish citizen and US dual citizen. I am US citizen. We live in USA for 20 years. We bought an apartment in Spain, Valladolid, last year and started renting it last year. What tax should we be paying in Spain? We do not plan to move to Spain in the next few years. So you are non-residents. As we said, as a non-EU resident, you would pay 24% for income sourced of rentals in Spain. This is my opinion. As I said, I'm not a tax advisor, but this is my opinion. A Roth IRA withdrawal considered as taxable income in Spain, and Roth conversions. So we saw that in the presentation. So I don't know exactly what a Roth conversion is, but we saw here investment gains tax as income as progressive rates. Okay, investment gains, and you need to report it in Modelo 720 in the overseas assets. Okay, with the value at December 31st. That also, and this increase the values of your assets towards the wealth tax and solidarity tax. Okay, so I hope that answers your question. Let me see. So this was the question. Roth withdrawals. But always, please consider consulting with a tax professional and ask about your specific situation. I also have content about people who decide to move to Spain, about recommendations on what to do with the Roth IRAs. Yes, a lot of people decide to do certain things before becoming a tax resident in Spain. So I have that content on Spainguru. If you want to send me an email, I will send you the links to that content so you can read it and get informed about it. Krista, I will move to Barcelona in April from US and start Spanish job in May. Is there anything to do to apply for Beckham Law upfront, or is it the only tax filing, only a tax filing time, or anything to do as I prepare to start? You need this, okay, about the filing for the Beckham Law, you need to go with a specialist, okay? What I know is that you have a maximum period of 6 months after in order to apply for the Beckham Law, but you do need to prepare the documentation, and it is something definitely to be done with a specialist. Robin, I have 2 flats. My daughter, who lives here, is staying in one of them. She recently told me that I would have to pay a gift tax on what would be the income as if I have rented the flat. What is the gift tax rate for this? Is there an amount that would trigger the tax? So you haven't given this apartment to your daughter, right? That would be a gift, and that you will have to pay tax on that. Now, if we're talking about that this is not declared and your daughter is just happens to be in that flat, and the property is technically empty, yes, there are some, let's say, there are some extra increments or extra additions to existing taxes that could happen if the property shows as being empty for a certain time, okay? And that depends on the municipality, it depends on the region. Like, for example, the EV tax goes up by 100% or 150% if you have had a certain property empty that you didn't report to have rented it out in a couple of years. For example, you start getting a bill for the EV tax or property tax in that specific property that is much higher than before, and that may be because of that, okay? But about application of a gift tax because your daughter is staying at your apartment, exactly that specific thing, I don't believe that there is a specific tax to that situation. It's just how you declare it in front of the authorities. Gabriel, my spouse and I have sole income in the US, Social Security income approximately 38,000. I moved to Spain in June 2024. Prior to moving to Spain, I worked in the US and contributed to Fed tax and Social Security. Is both the employment tax and the Social Security income considered regular income? What happens to the federal tax? I have already paid from the US employment income. Also, I have a property in the US. No. Okay, so this is more about like US taxes, all right? So this webinar is more about Spanish taxes, how they are considered. I think we went through that. How your Social Security is considered. Yes, you need to pay taxes in Spain because of that. Employment tax, yes, you need to pay. Or if you become Spanish tax resident, you will have to pay for your global income, okay? What happens to the federal tax that I have already paid from my US employment income? So, as I said, once you become tax resident in Spain, you normally have to file taxes first in Spain, and then you credit those taxes to your filing in the US. So normally you don't pay any tax in the US because you do that. Okay, so in years in which you still didn't become a tax resident in Spain, then you shouldn't worry about paying taxes in Spain unless you have income sourced from Spain. Okay, so this is, I hope that answered your question the best possible. Now let's go. For those situations, really consider consulting with a tax advisor that will review your situation and will tell you the perfect answers for a specific situation. How was CGT on business? Assume you're a startup and then sell it 10 years later. Well, depends what you are selling exactly. You're a startup. You're selling stocks. So if you're selling stocks, you would be paying because of income from selling stocks, right? You would be paying taxes on that. Does income tax apply separately for you and separately for wife's income? Normally, yes. Same for assets. Are they treated differently for you and your wife? If you have assets for 1 million, wife has 500K. Okay, if your assets are separate, they're treated separately. If they are joint, they're treated joint. Or let's say they're treated separately, but with different percentages of ownership. Peter, in Spain, are there filings for both the national and regional income tax done together? Yes, it's done together. Or do you have to file them separately? No, it's done together. It's just that the effective tax rate that you pay on your income is the addition of both. Okay, so the tax, there are small variations. Okay, those tax brackets on your income that go from 19% to 47% on a national level, let's say there are like maybe half percent variations in the different tax brackets. on a regional level. So it's the addition of both. But yeah, it will have an impact on your final effective tax rate depending on where you live on that tax year. The rule joining husband in Spain applies to capital gains tax. Do I have to declare this? I don't understand the question, Julie. I'm sorry. Peter, you have mentioned quarterly payments. So if your income is a pension, you make quarterly payments in advance of the filing? No. No, this is in case you are working. Okay, if you're working, for example, as a freelancer, you're working as a freelancer. When you invoice, you have to deduct the VAT, if applicable, if the company is in Spain or in Europe under certain rules. That then you collect the VAT and then you pay it back to the tax authorities, and you also have to do a deduction for your income. For example, in my invoices as a freelancer, I have a deduction of 15% of tax. But then later I'll make more income. Let's say I'm not going to pay 15% tax effective rate at the end of the year. I may be paying whatever depending on my income, but 25%. Imagine. Then I will have to pay the remaining 10% that I wasn't paying in each of my invoices, and declaring quarterly. But this is not for pension. This is for someone working. If I become an autonomo on the 1 of August, on the sorry, I'm a bit dumb for these things when they're acronyms or just numbers, just like that. I don't understand exactly what you mean, because also the month in the US is the first one and the second one is the day, and here in Spain this would be the 1st of August, but in the USA it would be the 8th of January. So I don't know. If I become an autonomo on the 1/8 in a year, will I become a tax resident this year? 1st of August, I guess, even if I will not spend 183 days that year. As I said, I believe that you will still pay as a non-resident for that year. As I said, this is and then the next year when you become a tax resident, you will pay as a resident. I plan to rent out my home in the US while living in Spain. What type of income is this to be reported? So this is rental income. This is worldwide rental income. And yeah, you have to report it as your capital, as your personal income. Okay. So yes, and if the rental income comes from abroad, from outside of Spain, you have less allowances. I don't think it is possible, for example, to deduct expenses or certain type of expenses. It's something to consider and to study separately how much you will be paying, because it might be considered a bit different, the rental income from outside of Spain than inside of Spain. Okay. All right. So I think we made it to the last question. I did my best to answer everything, and please stay in touch. As we said, please send me an email to hello@Spainguru.es, join the Facebook group, watch the YouTube if you want, and receive your newsletter every Monday. Just go on Spainguru.es. You will find the menu how to join the newsletter. And yeah, if you think the information that I shared today with you is valuable, is interesting, and help you in any way, please leave a review on Trustpilot. Thank you so much for joining today.